Bitcoin down more than 30% this week as the cryptocurrency fell to 4,200 this morning, its lowest level in more than a year. Our Seema Mody is live at the New York Stock Exchange with more on the move. Seema.
Melissa, that's right. Bitcoin down again today. It has dropped 65% so far this year and more than 75% from its all-time high last year. Now, the move south accelerated after a contentious dispute over Bitcoin Cash's hard fork, sparking investor concerns, adding to a whirlwind of regulatory worries over the SEC's enforcement against multiple digital currency platforms. Analysts say the broader equity market sell-off and this shift away from speculative momentum plays to higher quality assets is also driving Bitcoin's plunge. The broader crypto space has crumbled along with it. Many of Bitcoin's peers have fallen in tandem. Ether and Ripple down 8 to 9% each. The declines have taken a $700 billion chunk out of the total market cap of all digital currencies from their January highs. That's according to CoinMarketCap. Keep in mind, last year, Bitcoin gained about 70% between Thanksgiving and the end of December. Meantime, Fundstrat's Bitcoin bull Tom Lee just slashed his private price target to $15,000 from $25,000. As for technicals, some analysts say we could see minor support around 3,500, with the next major level being 3,000. Melissa, back to you.
Seema, thank you. By the way, Tom Lee's forecast, that's a year end, so it's like a month plus. For more on Bitcoin sell-off, let's bring in Bart Smith, the head of digital assets at Susquehanna. Here on Fast Money, we do call him Wall Street's crypto king. Bart, great to have you with us.
Hello.
Is this capitulation? Have we found a bottom? Are we close to a bottom? Like, where are we in this sell-off?
So there's a couple of factors that have led to this. Number one, the on-ramps for new capital is very difficult, right? And so if you're a high net worth person in the Western world or you're a global institution, it's still very difficult for you to buy Bitcoin the way that you might want to, right? So like a wealthy individual from the GI generation is not going to take a high-resolution, picture of their driver's license and send it to a website and send their money there, right? They want to invest at Fidelity. They want to invest at Bank of America. So that has led to the second problem, which is without the new capital on-ramp, liquidity has been very low. And so we've seen kind of a stable price all through the summer. We've talked about it ad nauseum on the show. It was at $6,000, give or take. But volatility got really, really light at the end of October. The 10-day realized vol was like 9.
Nowhere.
Yeah, and so what happens is in that environment, when you have a contentious fork, right, like you had Bitcoin Cash, and you could say that those two constituencies, conduct to one another might be defined as juvenile, right? And it doesn't necessarily create a tremendous amount of confidence. And when those sellers come in, there's just no liquidity to absorb it. So without these new on-ramps, that hopefully with Bakkt and Fidelity and further regulation in 2019, there's not going to be capital to soak it up. And so when you have sell-offs like this, you can't absorb it.
Is there a fundamental case for Bitcoin that can still be made at this point? I mean, the case for store of value seems to be a hard case to make at this point. And also the thinking that Bitcoin is a platform and that if it's built and it's being used, the price should go up. That doesn't seem like it's a good argument anymore either.
Well, again, so Satoshi Nakamoto designed this algorithm so that the last Bitcoin would be mined in 2140 for a reason. This is supposed to be a long game, right? So there's a lot of talk today about the Thanksgiving table a year ago, and yes, Bitcoin was at 8,000, but the Thanksgiving before that, it was at 750. And the Thanksgiving before that, it was at 350. And in 2010, someone bought 2 pizzas for 10,000 Bitcoin that today would be worth over $40 million. So I understand the price action, if you bought at the day the futures were launched in December to now, has been pretty painful. But listen, every great idea is volatile, right? Amazon, which we talk about over and over on the show, it went down 95%, went from $106 to $6, right? And people wrote it off as being dead. So I think that yes, the price action has been difficult, but the idea of having a peer-to-peer, sovereign, non-centralized, store value or peer-to-peer, cash is something that's been desired for a long time. And the price action from now until the end of the year, where Tom Lee may or may not be wrong, or into next year, is not going to define if Bitcoin is successful. It's just the use of it, the usership of it has to expand.
Does it hurt the trade, though, in terms of, I mean, if you think of Tom Lee as somebody from mainstream, equity strategy who's sort of bridging the divide by starting coverage of Bitcoin, issuing these price targets, for him to come out and stand by a $15,000 price target year end, does that ultimately hurt the space? in your view?
You know, I don't do price targets, right? So if someone asked me where could Bitcoin go, I would say, well, 2 Thanksgivings ago was at 750, and last year was at 19,500. So somewhere between there, right? Which is not a great market. I think that we in this world think about Bitcoin as an asset class, right? And that's not what it originally was. And so we turn it into an asset class, and we have discussions about the correlation to traditional asset classes. And David Swenson, who literally wrote the book on endowment investing, investing money into it, I think shows that there is a value
investing
for
money
it.
into businesses, though, as opposed to the cryptocurrencies themselves.
That's correct.
Yeah.
And so I think, for this to be successful, usership has to increase, and that may or may not mean the value goes up. In the United States, it's difficult. Like, Venmo and American Express works perfectly well for me. And so that was not necessarily what it was designed for. But the desire to have a non-sovereign, form of currency has existed forever. Remember, it came out of the depth of the crisis. Like, let's see what happens next year, right? Yeah. Let's see if central banks in the United States and in Europe can really unwind this thing successfully, and then we'll see, what people want to own.
Bart, thanks for coming by. Always great to see you.
Thanks.
Bart Smith, a.k.a. Wall Street's Crypto King.
I think it's really important. Since we started talking about it, Bitcoin and other currencies, it was $100 billion, and it went almost to $1 trillion, and now it's back at 100. And I think you have to think about this as one position in a portfolio, low single digits, and if that's how you want to be exposed to this going forward, that's how you do it as a percentage of your portfolio.